Right, hi Jerry. So what's been happening this week then?
Hi, Adrian. Yeah. Last week, interesting moves actually. What we call a risk-on move. I think risk-on move basically where investors are putting money into the market, into the slightly more riskier assets. Believe it or not, those are equities. Buying currencies, selling gold, that sort of risk-on move, selling bonds, and the markets did pretty well on the back of some positive news coming out of the US-China trade negotiations, so a bit of progress there. Trump sort of called it a limited sort of phase one deal, but it's still quite positive, which is good news. Yeah.
I mean, it's interesting. When you look at the S&Ps, like you look at the chart for the overall week. I mean, obviously it was, sort of slightly up on the whole of the week, but really Tuesday I think it was a massive down day, and then just three massive candles recovering all of that, and really getting up to sort of late September sort of highs really.
Yeah, it's interesting that the economic data hadn't actually been that good, and it was sort of mixed last week. But actually, I think it just goes to show you what they're focusing on. It's all to do with the sort of global economy and how is the perception that it's slowing down. And I think most of the blame has been put at the door of the US-China trade war. I mean, we talk about Brexit a lot, but really it is what's going on in this US-China trade war. And so as soon as you get anything positive come out about that, up she goes. And Trump's sort of in one of these sort of periods of his sort of presidency where he's feeling a lot of heat because of this investigation and the impeachment hearings in Congress, and he's wanting to come out with something positive, and it's almost like he sort of manufactured this, but it's a pretty limited agreement really. But the market's positive, but Monday after the night before, as it were, it's all sort of just off a little bit on the back of what wasn't a particularly exciting agreement per se.
I guess the thing with that is that if the data is quite negative, it's going to obviously less chance of will increase the chance of an interest rate cut, but that actually makes equities more desirable because people don't want to leave their money in cash, does it? So it's actually a bit of a flight into equities, because where else are you going to put your money right now?
Yeah, that's right. They call it TINA, there is no alternative, which is a curious phrase thrown around by the wealth managers in the States, but in a way, when you've got negative yielding bonds, where else do you put your money? You're stuck. So equities it is. But data was mixed, as I say, last week.
Well, should we have a look at the sort of calendar for last week? I mean, we could get into a little bit of that, can we?
Yeah, I've highlighted a few bits and pieces that came out last week. So I'll first of all, what struck me was the Chinese. The first bit of it was the Chinese data, their services PMI. We tend to look at a lot of the manufacturing side in China because that dominates the economy, but we know that's weak anyway. But the services sector, the way these numbers work, like all PMI readings, they get a report on whether purchasing managers see an expansion in their order book or a contraction. And so when the number is below 50, it means that sector is contracting. If it's above 50, it means it's expanding. Now, the PMI data in China was still positive, or is still positive, but it was less than expected, which was a bit weird, really, because we had no idea that would be the case. It's not been bad for the Chinese economy, really. The renminbi has actually strengthened over the last week, but I think that's more down to the risk-on attitude that's pervading the market at the moment than anything else. Other stuff that I've seen, Germany. We're going to be talking about Germany in the weeks to come because it seems that they're in a bit of a recession, a bit of a hole at the moment. Not been confirmed yet, but that's very much what the numbers are pointing to. Now I've got the factory orders out on the 7th, which means I need to just highlight that to show you all the data, but you can see these factory orders. That's a weak number, another sign that manufacturing sector is slowing in Germany. Remember, Germany is important because it's the largest economy in the Eurozone, in the EU, and it's the powerhouse. It's the one that drives the rest of the bloc, and we don't, no one likes to see it suffering the way it has done. It was offset slightly, though, by a better than expected industrial production number, which came out on the 8th. If I can highlight that there, German industrial production. So you can see the way these numbers ebb and flow. But the fact is that it's highly likely that Germany is in a technical recession, and a technical recession is when you get 2 quarters, so a quarter being 3 months, 2 quarters of negative growth. They've already had 1 quarter, and we're going to get the data, I think, in the next 3 weeks for the previous quarter, which ended at the end of September.
Okay. And then we also, I mean, really last week, one of the big items then, we'll just get rid of that, the minor data over the PPI over in the States. I mean, that was quite a bit under expectations, wasn't it, as well?
Yeah, see, this is interesting. So, a lot of the commentators are looking for another cut from the Federal Reserve, and the reason why inflation, well, that's PPI. There's also CPI I was going to talk about. That's a very good point. When did CPI came out? That was on the 10th. So you've highlighted a bit of information that I wasn't actually going to talk about, but it is interesting, and I tell you why. It's because Producer Price Index, PPI, is like a leading indicator to inflation. So it's the costs of goods and services going into production. When those goods and services are produced and then sold on, that's what inflation is. So PPI, weaker than expected. CPI, which Consumer Price Index, that's inflation. Or, as these numbers quite clearly demonstrate, a lack of inflation. And that's what's happening. In the UK, we got inflation numbers this week, actually, I'll get onto in a second, but there's no inflation. And if there's no inflation, why are interest rates up at 1.75% in the US? And this has always been, there's no sign of inflation, so why do you need to push rates up? Now they've got an excuse to cut them. And that's one of the reasons why the dollar fell last week. So if you look at a proxy for the dollar index is the euro. So you can see the euro, rallying quite sharply. That's the dollar falling. And that's on the back of this risk-on attitude, and also a perception that the likelihood is that the Fed will be cutting rates on the 30th of October.
Well, what's the, we've looked at the countdown over the last couple of weeks, haven't we? So how does that measure up at the moment?
Yeah, it's interesting. So
when we looked last week, I think it was about 85 or 86% likelihood we'll have a cut before the end of the year.
It's sort of ebbed and flowed, actually. So if you look at this, what it is, that's the current rate at 1.75 to 2. There's now a 77.5% chance of a rate cut.
Okay, so those people just listening to this, basically we've got the next meeting on the 30th of October, so there's a 22.5% chance, it's priced at the moment of it staying the same, and a 77.5% chance of a cut in the US interest rates by a quarter point, basically.
And that's actually improved significantly from last Friday, and also significant from a week ago as well. So
just getting more and more likely.
Yeah. And I think the reason why is because the data's getting worse. It's clear that the US economy is slowing quite sharply, along with the Chinese economy, which is the reason why a lot of these economies, like the German economy, is getting really bad numbers, because that's an economy that depends on exports, and if the global economy is slowing down, they're not going to be buying so many German cars, German engineering, the whole works.
It's good when it's good, but it's a bit smelly when it's bad.
When it's horrid, it's really horrid in Germany, that's for sure.
I mean, you got the case now with this is a slightly different picture. I think it was more likely we'd have a second cut for December. It's probably less likely than that.
I think it's a bit of a pipe dream to try to guess where the next rate cut after that happens. I just don't think it's going to happen. I think that's a 27% chance of it happening. But then, stranger things have happened. The markets could react to some very, very weak data, and by the end of the year we might be having another cut on top of the one expected at the end of this month.
Yeah. We shall see, won't we? We shall see. So, what are we looking at then, Jerry? The sort of the week ahead now?
Well, just one more thing, because we've been looking at oil, and oil, as you know, had some very interesting moves over the last 6 weeks. But the oil inventories now continue to build. This is something that the US publish on their oil. So this is US oil, and it's to do with the storage numbers actually in the US. So obviously if there is a greater amount of oil in storage, it means there's more oil sloshing around with constant demand. With an increased supply, the price will go down. And so it's something that the markets watch, and we watch it quite closely. And it was interesting. Oil is under a little bit of pressure, but it's mixed. It's certainly come off quite a lot since the spike after the attack in Saudi Arabia. But I was listening to the radio this morning. It was quite interesting listening to this analyst who said that normally oil investment, you sit down and say, right, let's go after this particular oil. We'll send in the trucks and all the drilling rigs and boats if it's in some deep water field, wherever. And it normally takes 10 years before they get it out of the ground. Now, in the shale oil fields in the US, they can make a decision today and they could be getting oil out of the ground by January.
Amazing.
So it's almost like just-in-time production in a way.
Yeah.
And it's fascinating to see how much the US is the largest producer of oil in the world now because of shale oil.
Right.
So data.
Yeah. Well, just quickly looking at oil, it had a bit of a run-up, didn't it, in the last few days? We had a nice trade on it, actually, on Thursday last week, a little sniper buy against the trend, so really quickly in and out of that trade. And actually, often what you find on those against the trend trades is they're quick, they have a little move higher, and then you'd expect them to move probably down to new lows. We've already seen that. We've already hit our target on it, and so much so that we actually put a note out on the US oil, so that's the US crude, to actually be a bit more cautious on it. So we didn't take that trade personally on the basis that actually it's kind of already done that move on that opening day, arguably. And in fact, here we are after $1.40 off there. So sometimes when you're going against the trend like that, you can see the trends on the left-hand side of the chart there, those arrows pointing down. Just got to be a little bit more cautious, particularly coming into the weekend, especially what we had a few weeks ago. But nice profit on that one there, at least anyway. So I interrupt, Jerry. You so next week then?
Yeah, another busy week this week. We look at the calendar because we like to know the schedule events, but there's a lot of stuff going on that we can't have a calendar on, and you know what it is. It's Brexit. It's all the stuff happening in Brussels. It's all the meetings that are taking place behind closed doors, and we're not sure how it's progressing. Barnier then comes out and briefs the 27 ambassadors to the EU and says stuff like it's fiendishly complicated and all this sort of stuff, and Sterling then reacts negatively as what we're seeing just here. What'll be will be, as they say, but the music, the noises coming out are still positive-ish. It's just there are headlines that suggest it's not going to be plain sailing, but they are in the detailed negotiations. So anyway, that's the sort of thing that is not in the calendar. Let's go through the calendar and I'll tell you what is in the calendar. It's a bank holiday that's today in the US.
Ish.
Yeah, people get a bit confused over this. It's Columbus Day. Columbus Day is a bank holiday when the banks are shut, the bond markets are shut, but everything else is open. So foreign exchange markets are open, equity markets, most importantly, are open. So there's not really much effect on our markets, and it's sort of ignored as a bank holiday as such. The sort of main releases start on Tuesday. We've got something called the Monetary Policy Minutes from the Reserve Bank of Australia. This is a bit like the MPC, and if you want to know what these central bankers are thinking, they publish their minutes and it tells us the reasons for them doing what they did. And the interesting thing is the markets will react to that. But it comes out in the middle of the night, and when we get in on Tuesday morning, the moves will already have happened on the Australian dollar, probably.
Yeah.
As always, but there we go. Moving on, inflation in China doesn't really sort of grab much attention, really. It's the data at the end of the week that I'll be focusing on, and that's the reason why I'm skipping past that. Central bank speakers, Adrian, I mean, there's just tons of them. I'm not sure how Forex Factory picks out the interesting ones from the less interesting ones. Mr. Carney getting a high impact number from Forex Factory. Mark Carney, the Governor of the Bank of England, is testifying at the Treasury Committee in Parliament on Tuesday, and obviously anything that's to do with policy will affect our currency and our stock market. But in a week where we've got this sort of denouement of the negotiations for a deal, I suspect anything that Mark Carney says people are just going to bloody ignore, I hope. He said, casting a bit of disdain regarding that. And there's something that's not always looked at particularly closely, but there's a number on the German economy. It's called the German ZEW Economic Sentiment Indicator always Germans love long words and long descriptions, but basically it's a number that tells us how well or how badly people perceive the German economy. And it ain't good reading. Another negative number, another worse number from the previous month.
Yeah.
And it's just more of the same. But it's interesting to note, and if there is a rebound, the markets could react very positively.
I mean, it's interesting. We talked about consumer confidence last week, didn't we, in the podcast? But actually, these are more sort of leading indicators, talking about how people feel about things, which then has an impact on how someone then goes and buys. Basically, it's
yeah, they're important numbers. Consumer, sentiment numbers. If consumers are happy, then they'll think about spending, and that spending will be articulated in the next month, 2 months, 3 months, and then you get better numbers. So
same thing with businesses and how they might invest in their business as well, isn't it?
Yeah, no. Leading indicators are really important to the markets. It's the lagged indicators, the likes of GDP measures, that tell us what an economy has done. We can get excited over them and say, oh, it's in a recession or whatever, but it doesn't tell us what's going to happen in the future.
Yeah.
Because anyone who tracks these markets, like the German data, we know they're having a real bad time of it.
Yeah.
In a way, we don't need the GDP numbers for that to tell us that. On to Wednesday, I think it is. Yeah, we got our own inflation data here in the UK. Having talked about the data that came out last week in the US, here we go again. Our target, or the target from Central Bank, the Monetary Policy Committee, is 2%. The rate's sort of been bubbling below 2%. It dropped, a bit of a surprise last month, to 1.7. It's about 1.8% we're expecting it. What will the bank do about it? Absolutely nothing. Why should the bank do nothing about it? Well, Brexit is unresolved, so anything can happen.
Yeah. And
it's pretty close to the target anyway, so normally we probably want to look at it in a bit more detail than this, but I'm going to dismiss it for now.
Yeah, they'll probably keep their powder dry just in case something else goes. They need interest rates for something else, I guess.
Yeah, I'd say, but normally, a big rise in inflation, you would normally get the currency jumping. Yeah. Because that would mean the central bank would have to push up interest rates. Higher interest rates, better return on the currency, investors buy the currency. It ain't going to happen this time. There are other reasons why sterling's rallying, of course, which we've already discussed. Retail sales. This is the US release of retail sales for last month. We look at the core retail sales. That's the one that excludes food and energy for some reason. I think they're volatile, too volatile. Anyway, plus 0.2%. Nothing much to write home about, really. Nothing to set the world alight at all. Let's quickly speed through the rest of it, because there's a lot to really talk about. UK retail sales, same deal, with the EU summit happening. I know it's an important number, but unless it's shockingly different from a slightly negative number that we're expecting, nothing much is going to happen. And then I'd like to just jump crude oil inventories, as every week is. Those are important numbers. It's delayed by a day because of the bank holiday. Normally out on a Wednesday, out on a Thursday this week. Finally, and most importantly actually, although not as far as Forex Factory are concerned, but we've got Chinese data out, and this is important. It's as important as US data, and I don't know why they give it a medium impact, but industrial production and something called fixed asset investment, but it's the industrial production number that we're really interested in to see how well the Chinese economy is faring. That's right. That's it.
Well, apart from Brexit, I suppose, we've got been a hell of a week last week, wasn't it? With deals back on, not on, whatever. Yeah. In fact, we saw that in sterling, didn't we? Itself, it bring up the pound. In fact, you've got pound dollar here. Suddenly, the talk of a deal maybe being on suddenly saw us rally from 122 up to nudging 127, and that's a significant rally in a couple of days, isn't it? Just easing back, a bit of a reality check maybe over the weekend, but. Big moves.
Yeah. I mean, we shy away sometimes from talking about Brexit because it has got so boring. I think in a week where, in a week where we are expecting either a positive outcome or it being kicked into the long grass, and then suddenly no deal becomes a reality again. The reason for the jump last week, basically. Boris Johnson met up with Leo Varadkar, the Taoiseach for the Republic of Ireland. They met in Liverpool last week, and they came out of a meeting and said, hey, guess what? We've got a pathway to a deal. Sterling jumps from 122 to 124.
Yeah.
And then we thought, oh my God. you then get all the cynical press that come out and say, well, that's all very well, but what's the deal? And there's no time to do it. So then Barclay, who is the Brexit secretary in the government, that met up with this chap called Barnier, who is the lead negotiator for the EU, and they met in Brussels on Friday, and they came out. Guess what? We see a pathway to a deal. And then sterling jumps again. I think we hit 127 eventually.
Yeah.
And what they do is they go into this thing called tunnel negotiations, which is the EU's way of describing detailed negotiations. But biggest jump in 6 months. So 122 to 127 in 2 days. You don't get that in a currency normally.
No, you definitely don't.
And it's incredibly difficult to trade, Adrian. Though.
I mean, we put a note out a while back to our customers just to exercise caution on sterling pairs, just because of it's really the fact that you could have a move like this bar on Thursday last week, sort of at any point. We're quite jumpy at the moment, quite event-driven, news-driven market. So in which case, any announcement by Barnier or Barclay or Johnson or anyone could actually have a really big and very fast impact on the market, which makes it a little bit more unreliable than usual. So we're cautious. We didn't take that short trade for anyone thinking that on the 8th. But I do think that once we get this deal done or something done, it is going to lead to some really interesting moves. And I was looking at the charts earlier, looking back to sort of June, July, August, September 2016, and some of the moves we had in the backdrop from the referendum vote there. Some really big moves. Ordinarily you might be looking at a 300-point move after a certain turning point. Here you're looking at suddenly 1,000-point moves, 800-point moves, 1,200-point moves. Really big moves, real big opportunity. But I just think for now, whilst we've got this, is it going to happen, is it not going to happen type of news, once we know it's going to happen, that's going to lead to a lot more, I guess, institutional positioning or repositioning with portfolios and everything afterwards. So could be quite attractive, I think.
Yeah, I mean, it's case in point. You can see what's happened today. I mean, sterling hit 127 on Friday, and what are we trading now? 125.5.
Yeah.
Reason why it's pulled back? I thought it would have just carried on going, but in fact the FT's come out and said that the EU have commented on the fiendishly complicated arrangements that the UK is proposing for a customs union. I'll explain in a minute, but
to be honest, it'd have to be. If it was that simple, we'd have agreed to it 2 years ago, wouldn't they? It's got to be complicated, surely, which is why we're here.
Well, that's right. The irony is the EU have been saying to the UK, come up with detailed proposals. We come up with detailed proposals, and they say, well, it's complicated. Well, it is complicated because the EU wants to keep the island of Ireland without any borders. But the UK wants to keep Northern Ireland in its custom union. See, it's like this sort of Venn diagram with
right. It's exactly what I was thinking.
Northern Ireland in the middle and a member of both of them. And it's complicated. Anyway, that's the reason for the pullback. So we pulled back, a cent and a half or whatever. But anyway, if you want to know the details, and you can call it what you want. I think some people are calling it the Canada minus arrangement. So it's sort of a couple of notches worse than Canada plus, as it were. But anyway, the fact is the EU are baffled by the proposals, but I can explain to you what they're trying to do. Goods entering Northern Ireland have to have EU duty paid on them as if they were entering the EU. If the goods stay in Northern Ireland, then the duty is refunded. I'm not sure that's that difficult, because you pay VAT and you get VAT back. I mean, duty, can't they work out the arrangements for that? They've got a couple of years to do it anyway. Northern Ireland stays within the customs union or area or territory and will benefit from any trade deals done by the UK. And basically, assuming any practical arrangements are agreeable to the EU, this avoids a hard border on the island of Ireland, which is what they want. They're just saying it's complicated.
Well, there you go. So I guess the question is, if it is that complicated, how likely are we to get this all done and dusted by the 31st? Probably, with all the legal documentation, it's probably going to be a bit sticky, isn't it? A bit tricky.
Well, yeah, that's right. I mean, I was just looking at an article on the BBC website, and they're saying that Michel Barnier said there's a big gap remained over customs arrangements, which there is, but that's what the negotiations are for. Otherwise, don't negotiate. Now, I think they've got to agree to a deal. They've got to have the agreement drafted. The agreement has to then be presented to the EU summit in Brussels that starts on Thursday, so it's on for a couple of days. Johnson then has to present the deal to Parliament if you recall we were talking about that earlier, Adrian, about
Yeah.
Parliament's actually sitting on Saturday this week.
Yeah.
And what's interesting is Johnson wanted to do that way before they'd had any agreement with Varadkar. So he's obviously got some. He wants to say to Parliament, you either vote for this or we leave without a deal.
Yeah.
And that's basically what's going to happen. People ask me, do you think he'll get it through? I don't know what the detail is yet of the deal, but the whole idea is if you can get the DUP and the ERG on board, they reckon there's about 19 Labour MPs that would vote for it.
Right,
if
okay.
it was acceptable.
Yeah.
Because these are Labour MPs who are in a big vote leave constituency. They can't afford to be seen to be voting against it.
Yeah.
Then it goes through. Will it get done by the 31st of October? I can't see how it can.
Seems like a lot of work to get done in a few weeks.
Yeah,
Doesn't it? 2 weeks.
Yeah, I think someone was telling me that the German Parliament has to ratify the agreement. So not only have the UK Parliament got to ratify it, the German Parliament got to ratify it. I'm not saying all the other 27 member states have to do that, but I don't know. 31st of October, maybe this session on Saturday, Johnson could genuinely agree to a short extension, maybe for a couple of weeks, to get a deal done.
Yeah. Well, then what?
Probably a general election.
More fun and games.
All this talk about the Queen's speech, about this and that and the other is going to happen. Of course, as Labour have said, it sort of looks like blatant electioneering, which I think it probably is.
Yeah.
And that's saying, and what the Tories have done is they've effectively spiked Labour's guns by telling the population that they're going to spend a lot of money on health and social security and crime and order and all that sort of stuff. Can they afford it? Probably not.
The thing is, I think it's always likely an election was required, because whether it was May or Johnson in power, they've still got the same problems, so they don't have the working majority.
They don't have
In fact, it's even worse now.
No, it is. You're right. Well, they got rid of 19 or 20
Yeah.
MPs who lost the whip. Not to say that they'd still vote Tory, obviously. And the big problem for Corbyn and no confidence vote is that the Liberal Democrats have said that absolutely they would never agree to Jeremy Corbyn being any temporary Prime Minister. And good thing too, actually.
Non-political.
No, not
Didn't
much,
say that.
but I can say that about him. Crikey, yeah, absolutely. So anyway, that's Brexit really. It's complicated. Hopefully, come Thursday, we'll know. We might even know something by the end of the day.
Yeah. Yeah, well, fingers crossed.
Yeah.
Okay, well, I don't think there's too much more to talk about, is there, Jerry, this week?
No, not really. Everything depends on what's happening, certainly for the UK. For globally, we've concluded some of the trade deals. I think Trump's trying to arrange some sort of summit between him and Xi Jinping to give him a hug and say, come on, let's remain friends, which I think they are. It's just that every time he goes and hugs him, he then comes back to the US and then fires off another increase in tariffs. But anyway, it's a long road, that one.
Yeah. Okay, well look, there's still plenty of movement otherwise, and even if you're a little cautious on the sterling pairs at the moment, plenty of movement otherwise. We're getting some really nice turning points on some of those Aussie pairs, Swiss pairs, and had some great results over the last few weeks actually, so do definitely keep your pencil sharpened for that as usual. And in fact, if you'd like to find out a bit more info about how we get on some of these trades that we've been talking about today, then do dial into one of our live trading webinars. We can talk about this little disc here on the charts and other strategies that we teach here as well. So dial in, guys. You'll find somewhere on the website the ability to register for one of our upcoming sessions. But otherwise, we'll tune in for another podcast next Monday, and then we'll probably have a bit more Brexit stuff to talk about, I suppose. I don't know what we're going to talk about when that all's done and dusted, but we'll find something. Don't you worry.
Maybe everything will normalise by then, and we can.
That would be nice, wouldn't it?
Get
Let's
back
face
to the
it.
business of making loads of money.
All right then, guys. Have a great week. See you soon.
Okay.